welcome to the podcast. We're so excited that you're here. We're so excited that you're listening. We are Curb Appeal Realty, and today we have a special guest with us. Her name is Karla Hendricks. She is a lender with Approved Mortgage out of Greenwood, Indiana. And we're so excited to have her. She's going to tell us all things mortgage, and she's going to conquer some of those myths that you may think are true today. So welcome, Karla.
Thank
Nice
you,
to have
Dianna.
you.
Awesome to be here.
Yes.
Such a privilege. Thank you. So I think I'll start with what we call the four vanillas, the four main types of home loans. And the first is, of course, conventional. That's probably the one that most people know right off the bat. With a conventional loan, I'll go through the different types of loans and then also just give you some strengths of each one. A conventional loan is set up so that for eligible borrowers, you can sometimes go as low as 3 to 5% down. You don't always have to go 20% down. It just really depends on your situation and your eligibility. They are very good for primary residences, and they are also good for secondary vacation homes. They are the only loan type that of the four basic loans that we can do a vacation home with. Even though you may have private mortgage insurance up front, depending on your down payment amount, at 20% paid off, that mortgage insurance drops off. That's a huge benefit because that means your monthly payment could drop at that time. A nice thing about conventional home loans is that they are flexible on term lengths. So they don't always have to be 30 years. Sometimes they're shorter. As a matter of fact, we closed one last week that was, I believe, 20 years. Yeah. That gentleman chose a 20-year length. That's awesome. So there's a lot of flexibility in that. And another thing about conventional loans is that they are a little bit easier on appraisal inspections. They're not going to be so nitpicky, nitty gritty as maybe some of the other home loan appraisals will be.
Which is great because some sellers, just don't have the means to do a lot of repairs. So
that's true, and that is why some sellers tend to prefer an offer with a conventional, although there's other loan types that are actually very strong loan types as well. So the second one would be FHA. FHA is another very strong loan type. It's very popular among first-time home buyers, but you do not have to be a first-time home buyer whatsoever to use an FHA loan. For eligible buyers, they may be able to go as low as 3.5% down payment. So it is pretty low. It is easier on credit than a conventional loan would be. So sometimes if there's been maybe a lower score or something on the credit history, sometimes an FHA loan can be a little bit easier on accepting that. It is easier also on the debt to income ratios. So that's a nice thing. FHA actually increased their debt to income ratio this past year, which means we can actually fit more home buyers into an FHA loan than ever before.
Yeah.
FHA is a little bit stricter on the home appraisal inspections. So they will look for things that a conventional will not have to look for as much, such as like peeling paint, things like that. Anything that could be a health or safety hazard is going to be looked at pretty closely with an FHA loan. USDA is another really strong type of loan. It has got a lot of unique characteristics. USDA is actually put on by the U.S. Department of Agriculture. Interestingly enough, you would think of farms and cows and chickens, but they actually do home loans as well. And the reason is because they want to help home buyers buy in the rural areas. So for a USDA loan, you actually have to fit into the map. USDA has a map that you can plug an address into. Anybody can actually look up this map under USDA.gov and type in an address, see if it's in an eligible area. What makes an area eligible is that it needs to be in a population of 35,000 or less. So a lot of times it will be out in the country, but it can be in a small town of 35,000 or less. So a lot more areas are eligible for USDA than you might think at first glance. And then VA loans. VA loans are kind of near and dear to my heart. They are for veterans and or active service members of any military branch and some spouses. So that's just something to be aware of. VA loans are they are strong because the government actually guarantees a portion of that loan, and so that enables sometimes the rates to be lower. For eligible borrowers, they may be able to go as low as $0 down as well. So it's pretty amazing. It's a very good benefit for veterans and service members alike. So checking eligibility is something that we can do easily. We can go through the VA and get that done quickly and find out for sure. If anybody's not sure that they're eligible, we can double check and find out.
That's great to hear. I know I helped years ago my mother-in-law and father-in-law buy VA because they had been in the service a long time ago, and they did not think that they were eligible, and we found out that they were.
It doesn't have to be recent.
Yeah.
It's amazing.
They were very grateful because, yes, they were coming out of a rental situation and got them into a home. And that was, like I said, years ago when I was brand new. But I said, let's check. We might as well.
Right.
So, yeah.
And there's no area restrictions on a VA loan like there are for USDA loans. So they're really quite flexible.
And I just think, now we have the internet, and I think veterans are more educated coming out of the service, or even if they're still in the military. I mean, they just get a lot more knowledge now than they ever had before. But yeah, helping those veterans is definitely something that's near and dear to all of our hearts. We love to help our veterans. We love to help them get into their first home. So they deserve it.
Yes. So I'm always thrilled when I can help a home buyer get a VA loan. So it's a great benefit.
Absolutely. Okay, so now that we've talked about those different types of loans, let's talk about some do's and don'ts about lending. Because a lot of people don't realize now that they've been pre-approved what comes next. And I'm sure that you tell them, but why don't you tell the audience what are some things that you would absolutely not do once you get that pre-approval?
Once you get pre-approved. Yeah, that's an awesome question. And one thing that comes to mind quickly is don't make a big purchase. Don't buy a car unless you want to make that your primary residence, because it can change your debt to income ratio significantly, which could make you ineligible for something you were previously eligible for. So if you have any questions about making a purchase, just feel free to contact me, and I can check the numbers and let you know. But very much err on the side of caution. And also don't become a co-signer, even for a student loan or somebody else's car or any kind of loan, because even though it's their debt, it will come up on your credit report and add to your perceived monthly liabilities. So
open a credit card, right?
Well, actually, it's okay to open one.
Okay.
That won't hurt you, but don't spend, don't incur extra debt. So if you open a card, that really wouldn't hurt you. If you put
so open it, but don't use it.
Open it. Maybe get a Starbucks if you want, but like anything beyond that, let's talk.
Well, that's good to know.
Yeah. Surprisingly, that having an open credit card that just has a very, very low balance is actually something that can increase your credit scores. So it's not a bad idea to have that open credit and have a very low balance on it. Yeah. Let's see what else.
Do you encourage your clients to know their credit scores and to look those up before they even reach out to you?
That's actually it's a really great point. Yes, knowing your credit score is great. Surprisingly, a lot of people don't realize that the credit scores that you can see through maybe Credit Karma or through your yearly free credit pull for your tri-merge for all three bureaus, that's going to be a consumer-based credit score with certain risk factors. And then when I do a credit pull for a mortgage, it's going to be different numbers than what you may pull. However, the same things will be on there as far as maybe if a collection came up and you didn't know that it was on your, somebody had put in maybe a late bill that was never paid or something that you weren't aware of. So those things would come up on either credit pull. But definitely be aware of your credit. Take advantage of getting your free yearly credit report so that you can dispute anything that doesn't belong on there. That's a great idea. And just know ahead of time if there's any items that we need to deal with. But that's also something that when we do an application and we do the credit pull, we always look for things that if there's something that needs fixed, we can advise you on that and how to fix it and get that taken care of if it's going to be an obstacle to pre-approval.
So you can work with them to maybe not purchase right away, but maybe get their credit where it needs to be so they can purchase in the future.
Yes, and I'm so glad you brought that up. That does happen. There are times when we do an application, we pull credit, there's something that maybe somebody just wasn't aware of that's on a credit report that needs to be disputed or needs to be taken off, or in some circumstances, just a certain period of time needs to elapse in order for us to move forward. But sometimes it can be a quick thing as well. There are things such as rapid rescores when maybe a very high balance is paid down. We can usually assist in that and then get a rescore done quickly so that it can be done in a matter of weeks sometimes, get an updated score after an issue is taken care of. So don't be discouraged if there is something on the credit report that you weren't aware of or that is an obstacle, because a lot of times it's something that it can be taken care of and move forward pretty quickly.
Well, that's about all the time we have today. We're so grateful that Karla was able to stop by and talk to us about all things mortgage. So if they are in the market for a mortgage and they want to buy a house, how can they get in touch with you?
Well, I am with Approved Mortgage in Greenwood, and you can email me, call me, text me. This is one thing that I love about our company is that we're local. We've been in the Central Indiana area for 30 years, one of the largest and oldest mortgage bankers in Central Indiana. So we have a lot of loan options because not one size fits all. I'm sure you are definitely aware of on the real estate side. So you're welcome to contact me. My phone number is 317-412-2548. You can text as well. You can email me at khendricks@approvedmortgage.com.
And I have used Karla a few times, and she has been amazing.
Thank
and
you.
everyone raves about her afterwards. Nice. She is such a caring, she just cares about her clients so much. So appreciative of that.
We were talking earlier about we like to do unto others, how we would want to be treated.
Exactly.
So that's definitely my philosophy to just come alongside and guide and help and answer questions and help you get to your goal. Find out what your goal is and help you get there.
Awesome. Well, thank you guys for listening, and thank you, Karla, for coming on the show.
Thank you, Dianna.
Tell the world